Ladies and gentlemen, welcome to the Big Tech Frenzy. Now, it is, actually, I didn't even put it up. It is Fiscal Friday. Do you know what that means? That means we are going to look at a new company to see if we are going to start investing. Okay. This one, I'm pretty excited for. Okay. As you guys know, I love tech companies. I love advertisements. I love high growth. Any guesses on what name we could be talking about? I think in the next 60 or 120 seconds, I'll say. But let me know what stock you guys think I am talking about. After we end up going through this company in sort of a first impressions to see this business, I also want to talk about some news pieces, potentially me, once again, buying another dip because I think there's just some insanity going on with SoFi that I just honestly cannot justify anymore. Clearly, Q3, and we can talk about this, is going to be a very, very good quarter. And it seems like there's just constant fake news that's being put out. Actually fake news being put out to try to lower SoFi stock, tear it down, what have you. Finally, we start to see the company fall just a little bit, and we end up seeing, the Giuliano Balonies of the world come back, which he actually did. He gave a price target on the stock, which he increased by 100%. He doubled his price target on SoFi, but it did, in fact, only go from $6 to $12. So let's see. All I'm seeing is currently right now. Did Amit send you guys? What is happening right now? It's the only thing that I can see on my screen. So no one's guessing. Meta's a good guess. That is a growth tech company in advertisements. Meta's a great guess. But it is not Meta. Trade Desk, maybe. Shift 4, not seeing it. We did that last week. Amazon. Vincent, finally, the first person to actually guess the name, so we can move on now. Ladies and gentlemen, this episode is about Reddit. Now, I'm not the most frequent user of Reddit, okay? I'm sure because a lot of you guys here are on YouTube. Maybe you don't use as much Reddit as maybe a platform like YouTube, for example. But this could be quite interesting. Quickly, let's look at this and then also put up revenue percent change. Now, it's a newly public company, so we only have so much data here. But as you can see, these past couple quarters, just on top line growth, was 77%, 61%, 71%, 67%. Now, that 77%, you could say, oh, well, you know what? That was a bad comp. No, that grew off of a 53% quarter. The 61% grew on top of a 48% quarter. That 71% grew on top of a 68% quarter because in December now, Reddit is just known to do extremely well. So on the back half of the years is actually where things start to look very good for Reddit. That's what we're going into. Now, if it was just on, the performance of this company, I wouldn't be as excited. Actually, it doesn't look as good whenever I do that. But if you look at the chart here, we ended up going as high as, what was that? That doesn't actually show me the high here. Does it? Does this show me the high? If it doesn't, I have it here. Because boy, oh boy, have we had the sell-off. Yeah, 282.95 was the actual high. And now we're brought all the way down to $200 a share. Only recently bumping up an additional $6 because an analyst said enough is enough. Okay. There was an analyst report that came out today that said, guys, all the information that we're getting from Reddit is seeing that things are looking extremely positive. So there's two ways to look at a Reddit user: Reddit logged in and Reddit logged out. Okay. So if you are a unique user to Reddit and you have an account and you're there to stay, The actual average or the average revenue per user, a little redundant there, for a logged in user is about 10x. Now, the recent reports that have brought the stock down from, $285 to $200 per share was based on the idea that OpenAI was sourcing Reddit less. Now, this was from one site claim that ended up saying this, that said, hey, you know what? They used to cite Reddit about 7% of times. Now they're only doing it about 2% of times in one single month period. Okay. So then we saw a massive sell off. But this is what opens up opportunity for us. If logged in users monetize 10x the rate, then maybe the logged out users are not as highly that's not as exciting if there are changes in things like SEO and stuff like this. On the AI platform, I'm just calling a big bluff on this. As Reddit has constantly cited that they are the number one most cited domain across AI for all models for their data. So unless somehow Reddit is going to be chosen less, which I don't think is going to be the case because their daily actives and weekly actives continue to climb, not only from the US, but especially on the international side. This is also quite interesting as well. Reddit is sort of looking at three main strategies right now. Improving the core product, better speeds, user interface type or like user experience type feelings, like just make the product better. Then it's internationalization. They're really pushing into other markets. That hasn't always been the case for Reddit. It's been very strong in America exclusively. And there's also things to say how strong the user in America is monetized at. That continues to climb. I'll show you guys all this in a second. But the next part is that they want to become their own, search engine. So Reddit Answers is now trying to pick up a lot of pace. They're talking about having roughly about 70 million users now using search. That grew extremely quickly. But for the main purposes of what we're going to be talking about today, the things that I'm excited about for Reddit is their ability to, really, really ramp up. So what this analyst article came out today was saying that if you look to Meta and you see what their average revenue per user is and how much they monetize based on advertisements, and you bring that over to Reddit, we are nowhere near, monetized as much as we could on a per user basis, let alone the growth of their user base in general. So now with new things like dynamic product ads, which is essentially Reddit shopping and all of these new products that are coming out, that Reddit could be in a very large growth stage, especially through the next 6 months or so. So in the short term is where people are seeing a lot of these great benefits. But let's see. Okay, so hopefully everyone can see this. Let's go ahead and take a quick peek-see at some things that I wanted to look at. So first up, we have to take a look at gross profit and the margins on that profit, because Reddit is in that space. Okay, 90+% gross margins. Their ability to serve a customer is extremely low cost. It's only getting better as they continue to grow, essentially faster than they're increasing their expenses. So gross profit's getting better. And then flowing all the way down to the bottom line, adjusted EBITDA looks better. And then net income is very recently profitable. Okay, so if we look here, Reddit has not always been profitable. Only recently have they actually started to ramp into profitability. And a lot of those expenses still is stock-based compensation. Okay, stock-based compensation for this company is huge, huge. Do they call it stock-based compensation or share-based? There we go. Share-based compensation, and then share-based compensation common size. Yeah, so if we take a look here, just zoom this in. So this was IPO, so don't factor this in too much, okay? those large spikes, every company has them. You go look at what SoFi looked like, Robinhood, all of these companies that have IPO'd in the last 5 years, they all have a spike during IPO. After that, however, this stock-based compensation is still very high. They like to compare to their peers and say, hey, you know what? We're in line with a lot of these other peers in these high double-digit numbers, 17+%. Investors still don't like it. They're fully aware. They're trying to keep this under control. So while their revenue continues to skyrocket, the stock-based compensation has not moved too much, and they are very, very worried about minimalizing dilution. So there are things like buyback plans that are fully in motion, and they don't want their shares to be ever increasing. So keep in mind with that, because that's what's going to allow the stock price to continuously increase. Okay, let's get back to some of the things that I wanted to talk about. Okay, actually, I want to hold off on valuation right now. But one of the things that I did want to talk about was estimates here. Let's see if this loads. No. There we go. Sometimes you just got to click through. Okay. So one of the things with Reddit is, and I'm on let's go to, well, we can look at both EPS and revenue here for a second. But the next thing that I wanted to talk about is just how conservative the Wall Street analysts are being. And the problem is that Reddit is being extremely conservative as well. I mean, consensus for revenue is 546 million. Let me double check. I think that's actually above the high end of what Reddit had said for their earnings next quarter. And the reason why that is because they've just been extremely conservative. Last quarter, they came in, Wall Street thought they were going to get 425 million in revenue. They got 499 million, a 17% beat on revenue, like an insane amount of growth. Okay. EPS, they thought they were going to get 19 cents. They got 45 cents. Like, that's just insane. So they got nearly like 150+% beat there. So that's one of the things that I'm constantly seeing with Reddit is, like, talk about the ability to completely destroy earnings. And that's what's been happening and why people are getting so excited on this stock. But the recent drawdown is what I want to talk about. So let's just skip ahead a little bit and we can go to talk about valuation. So the first thing that we're going to notice whenever we're talking about valuation, if you're comparing it to other stocks that you guys talk about, this is still expensive. Okay. If we look at PE, they are newly profitable. Okay. So we're looking at like, what is it today? 135 times price to earnings. But like I said, they are extremely newly profitable. They were negative until March of 2025. That said, if we look at, and we can bring in forward price to earnings as well. Now we're looking at, closer to 86 times. And if they can continue to multiply those earnings, it's going to get much, much cheaper. Okay, let's go to something like price to sales really quick, and then forward price to sales. And we'll zoom this in a bit. Okay. What we end up seeing here is that price to sales, which was actually much, much higher as recently as just a couple weeks ago. Okay, looking at, I can't actually see it. My camera's blocking it. I think that's closer to 25 or even, oh, sorry. No, that's 30 plus. Yeah, 30 plus times price to sales. Now that's down to 23 times right now. And forward looking price to sales is now 15, nearly 16 times. Still expensive, but if the company can continue to grow at these prices, which is essentially, 70+% rates, that's not going to be expensive for very long. Okay. It's if they can do that. Now, the thing that I find that Reddit is prioritizing more now than what they have previously is monetization. They're starting to get some very, very large customers in their advertising space. They're growing like gangbusters. Like the advertising revenue So here, I'll show you. This is actually another cool feature of Fiscal AI really quick. If we take a look, we can see advertising revenue and then other source revenue. So that's their total amount of revenue that we end up seeing here. If we look at the percent change, although it was 77%, the advertising revenue actually grew by 83%. 83% last quarter. Now they're starting to get dynamic product ads. They just created a global sales team. So now more of a global scale team, I should say. For the really top customers, the ones that let's start from the beginning. Advertising grew 83%, but the amount of new advertising customers grew by 50%, which means that customers are going deeper with the relationships with Reddit than they are actually expanding to more customers. So that means, the, how do you say it? Like net dollar retention, extremely high. Okay. Really, really high. So for those large customers that they have that continue to want to deepen those relationships, now they have a global scale team, which allows them to now say, hey, we're talking to some of the largest customers in the world. How about instead of just US markets, we're also getting you out to talk about advertising in international markets. And that's important because whenever we look at segmenting KPIs still, let's go to, we'll look at that in a second. Let's take a look at total US quarterly dailies and then rest of world dailies. And then why isn't that expanding? There we go. So these are the two different customer counts that they have. And we can look at them maybe this way. Maybe that's a little bit better. US customers have been almost tied with the rest of the world, but now rest of the world is starting to really break out. They are really internationalizing their business because whenever you talk about total population, the US can only offer you so much, right? Like if you look at Meta's, total US population versus rest of world, it's, heavily favored, 10x, more than 10x favored in rest of world because that's where the population is, right? Now, whenever you take a look at that versus US average revenue per user and then rest of world average revenue per user. The US consumer, extremely important to Reddit. Okay, you're going to notice two things. Once again, not only did user counts continue to climb every quarter, user counts, the last slide that I just showed you, but the average revenue per user on those customers really skyrocketing. Okay, and what you end up seeing here is you see a peak, like most advertisers, in December. December's really strong. The month before, it's really strong. And now seeing this unbelievable peak, the height being in Q2, that's something that's completely breaking trend. Look at their other Q2s. Let's highlight their other Q2s. Q2 here, Q2 right here, not the high of the time. That would have been the year before it at the time. Like if we scroll back, right? Like, let's go to this June. That was not a high for them. Let's go to the next June. Not a high for them. That was the months before. And in fact, the year before, average revenue per user was higher than that Q2. The next Q2, not as high as the year before or years prior. However, this Q2, brand new high, skyrocketing 83 cents higher than their last highest peak from December. That's completely breaking trend to the upside with continued strength into the rest of the year. Okay, so talk about the average amount of revenue that they're going to bring on per user. They're now actually, so sales and marketing can be deceiving because they clump that into one basket, sales and marketing. But for Reddit, it was just sales. That was commission for advertising, all of those things. They weren't marketing. Now they're marketing. So Q2 and beyond, we might actually see a different level of growth because they're trying new strategies to acquire new users, new advertisers, everything like this. So this level of growth, and by the way, that same trend was broken on international customers as well. I should have highlighted that as well. Completely brand new high for rest of world average revenue per user. Okay. So even whenever they scale faster on rest of world customers, that broke trend as well. Eh? Not too bad. Not too bad. So a way to look at this, by the way, because they do have this, look at total global average or daily active users. And by the way, they have weeklies as well. You can look at global weekly average users, which is even much higher. You start to see how many users they really have, over 400 million customers that come to the platform. And the growth recently, like, look at this. So another thing too that happens with Reddit, there's a Trump effect on Reddit, okay? When politics are spicy and there's a lot to talk about and many people have opinions, Reddit does well. So while Trump is in office, Reddit could be a name that benefits, even from if their followers might not be super fans. Because if you guys don't know, Reddit definitely does lean left leaning. There are they try to not have bias. They have communities that are more for conservatives and these sort of things. But the average community, or not average, but like it is definitely left leaning for sure. Okay, so let's take a look really quickly at global daily actives, and then we'll also take a look at global average revenue per user. So in one great slide, this is what it looks like. Users are climbing, okay? The amount of revenue that you're making is usually peaking in December, but that's not the case anymore. We just peaked, before that year end, but yet we're still coming into year end, as we're about to see Q3, Q4, etc. That's going to be very, very exciting. Okay. Reddit is toxic. Yeah, I don't know. Those are not opinions. Like, that's not what I'm here to sort of make my opinion based on. I don't really care if people are enjoying their experience. I care if people are coming back. And I like how management talks about how they're actually, although they are focused on monetization, they are really, really focused on product. If they have the best product and if they have, these sort of things, then people are going to continuously come back. So they're putting a lot of money back into improving the product experience and worrying about new users actually being able to find communities that sort them and, make them want to come back more and more and more. So this profitability thing for them is secondhand, and yet it's still such an absolute, amazing growth driver for them. Okay. So with this profitability, by the way, they are cash flow positive, free cash flow positive. They don't really have much CapEx at all. So operating cash flow versus free cash flow looks very, very similar. But we're looking at just a sub 100 free cash flow margin. Or sorry, price to free cash flow. If we go ahead and take a look at free cash flow, and then we'll go to ratios here. Very, very easy to build charts, by the way. So it takes you a little bit to find out where to find things, but even if I didn't know where to go, I could just type in free cash flow and see free cash flow margin, percent, free cash flow per share, all of these things. So it's all there if you just want to type it in. But if you know where to look, that's easy too. Okay. But yeah, free cash flow positive business, great rates, only expected to increase over time as they lower some of their expenses, increase the amount of growth, find new large merchants to end up advertising on their platform. And if they can continue to bring on more and more users, that's only going to get advertisers more exciting or more excited. Another thing that they've recently done that has led to an increase, like a step change in growth, is starting to activate more of those third-party advertisers. So not third-party advertisers, but the third-party platforms like Smartly, for example. So Reddit has said, hey, not only can you gain access to our advertising platform directly through us, first party. But we've also partnered with companies that you might be working with. If you're doing, advertising across Google, Facebook, Reddit, and Instagram, and all of these places, you want to do that from one large platform. We understand we're going to have the same take rate. You can pay smartly whatever you want. So they need to do more and more of those partnerships, but they've only really started that very recently. So there's a big expansion from very large advertisers, recently. You should be able to start what you look at. What? You should be able to star what you look at most for quicker research. I think that's a great tip. I think that's great. If they don't have that, I could definitely, let me write that down, because you know what? Like I said, I'm pretty close with the team. And I meet with some of their devs from time to time. So I'll tell them that. Like a favorites metric tab, something like that. Okay, cool. I will tell them that. That's a great tip. Okay, let's get back to Reddit. So first off, what do you guys think? What has been your initial reaction to Reddit? Do you guys use the platform? Do you feel like there's some anchoring bias because the stock has been so low very recently? I feel like some people definitely have that, where they see Reddit at $86, at, in the 90s, like sub $100. And it's very, very hard to pay 2x that price that you could have gotten a few months ago. Here's the thing. The company is growing like gangbusters. So it's going to be very hard for you to get, or for you to complain about what you pay for this business if you didn't get on the boat here or here or here, and you're going to wait, quarter after quarter to find that platform. I mean, you have that same sort of problem with SoFi, with Robinhood, with Nvidia. If you don't get on early, it shouldn't stop you from getting on later, because unless it's expensive, but relatively, price of sales goes down if they continue to put out higher and higher revenue. I never use Reddit. I use it every day. Couldn't pay me to use Reddit. I need Reddit to be closer to 150 for me to get interested. I think that that's a fair price to ask for. I also think that I'll talk about this in a second, Bunny, but 150 I think would be an amazing price to ask for, very fair for the growth. But the 70+% rates of growth, that the range in which they beat their earnings is so disgusting. Like, you cannot find many companies where a company will come out and say, hey, we expect this, and then you beat on revenue, not only from like what the company says, but on what Wall Street says, by nearly 17+%. I said nearly. They did beat 70+%. It was like 17.2%. That is a disgusting beat. Okay, the EPS beat by 150%. Reddit now is not Reddit. I use it from time to time. Like I said, I'm definitely a heavy. Well, one, there's not too many communities that I'm involved in, and whenever I'm researching my stocks, I'm either directly on X a lot, or other sort, like reading through the articles of where they're cited from. A lot of Substack lately too. I'm on Instagram sometimes for the reels. I find myself on Netflix. Reddit, not as much. Not as much. Sometimes I get dragged there from questions I'm asking Google. But yeah. Reddit is hard to use. Well, I mean, that's kind of what they're trying to fix, right? I don't use Reddit directly, but I know my searches on Perplexity use it. So that's another part. How do you guys think about that? I mean, we used to have forums all over the world. This was a great source of information for a lot of different communities. And now Reddit is essentially the place where all forums are placed. Okay. In the world of artificial intelligence, that's a pretty good learning spot. That data could be very, very valuable, not only for external LLMs, but Reddit's LLM in general. I mean, they do want to become a search engine. I don't know. I don't know. So far, based on their execution, I get more confident in believing that they are able to do these types of things. But for me, the thing that I think is just the most interesting is how much they're ramping monetization right now. The monetization on the platform is disgusting. The peak in Q2 is crazy. Okay. The what do you call it? International growth, very, very exciting. There's a lot of room to go in international growth. Okay, so you talk about having 400 million weeklies. Like we could get that to billions. Lot of room to go. I'm not using Reddit. It's hard to find threads or follow them. Yeah, I mean, I remember whenever I was younger, I like the first couple times that I used X, I found it hard to like understand how to follow the conversations because of just like every tweet has its own space, but then you can comment, but then those comments can have comments. And I was like, man, this is hard to read. But then I just got used to it. So I bet the people who are on Reddit constantly just adore the style that it has. I find the comment section in Reddit and like following those conversations is just, it's not it, Chief. It's the DGen hangout space. You're saying that because of Wall Street Bets. That's what you're saying it for. So I did not buy Reddit. The stock that I did buy was SoFi. Guys, I'm getting to a place right now where I'm like, I think that SoFi is going to outperform many of the companies that I'm holding, because I think many of the companies that I'm holding are going to obviously do very well, or else I wouldn't buy them. But the difference between where those stocks are at versus how much I think they're going to beat by, huge margin. And like comments that Anthony Noto has been saying recently, like even his comments on X today, I'm like, man, this guy makes me so bullish. There was a massively negative comment that came out. I have a video coming out tomorrow about this, but here, okay, what is going on for real? I'm getting people DMing me currently right now. Is this something that like did Anthony notice, or Anthony Noto, did Amit send you? For real. Okay, let's go and talk about this Anthony Noto post though. So data-driven investing ended up showing off this post, which was the Yipit data that said that SoFi's personal loans are down 22% in August. Okay, which, at first sight would be scary. However, you realize that this is month over month. Okay, so they're saying that it was not as high as July. And that so far, what you can also see here is that in Q3 quarter to date, it's up 59%. 59%, which, as data-driven investing points out, that would actually make personal loan originations at 7.78 billion, which is a huge increase. So even in their own estimates, 11% growth quarter over quarter, 59% growth year over year, even in these own estimates, which the stock fell on, and the Fitch rating news that we ended up falling on before, and the Upstart origination news, which was literally faked, just keeps bringing the stock down. And yet, whenever you actually look at it, it doesn't look bearish. Now, you guys tell me, out of all the companies that you've ever found, does a CEO retweet the bad news and say, we appreciate all the hard work that goes into sharing all angles and perspectives, positive and negative, on SoFi? Do you think he's retweeting his demise right now? Like, let's just think about this for a second. You know, the last retweet that he did of data-driven investings was amongst the fastest growth companies in the stock market. And he said something along the lines of SoFi will be on this list, or SoFi is the only fintech on that list, or something along those lines. I forget what it was. But this is very surprising to me that he would retweet this. You know, SoFi's IR team came out to correct the last thing, to say credit is still doing very well, performing exactly how we thought it would. And then this, I'm like, man, what? Like, I actually think, Tanner, when are you going to come around on SoFi's manipulation? I don't think it's manipulation. I think, I mean, it could be, but I honestly just think, like, we're just getting it from all angles here. It's just incredible. So many different reports. The two, like, Giuliano Bologna waited till today to put out his sell rating. You know, why didn't he do this earlier? Now he goes out to update, which, by the way, he increased his share price. So the last two analyst upgrades from SoFi was $13 to $18. They upgraded, but they said, you know, we remain cautious, but we think they'll be in line with the rest of the fintech peers. Much different than having a hard sell before. Still $18 from 25. That sucks. Next, we got Giuliano say, hey, it's not $6 anymore. It'll be $12, but things are still not looking great. He wants the company to get cut in half. Yeah. CRN is currently, right now, it's a saying that Amit has popularized by doubling up on the right now-esque. It's the Amit cult call. Yeah. You got to love them, though. They're a harmless group. The fake news and analysts still didn't adjust SoFi fundamentals. I don't know about that. Let's quickly take a look. So last time I checked, SoFi's EPS was 55 cents for 2026. Let's see if that's adjusted at all. We can use Fiscal AI for that as well. Okay, let's take a look here. So we're on annual, so we just switch it to here. For consensus, why don't I have one? Yeah, 55. I don't know why that's blurred. Why is that blurred? Huh? Let me refresh that. That shouldn't be blurred. But anyway, it's right here. Okay. Yeah, so they didn't adjust that. I don't remember what it was to the dollar on revenue. But oh my gosh. Revenue 3.45 billion is essentially what they're calling for. I think the high side is more what it's going to be here. It's probably closer to 3.6 billion, and honestly could even be higher. And what do they say for EPS this year on the high side? Only 35 cents. I think that's going to be that's going to get beat. That will get beat. On the high side, we have 70 cents, which I think is fair. And the reason why I say that that's fair is because Anthony Noto recently came out and said the range that they gave was not like for all conditions. The range, or sorry, I guess it is for all conditions, but the bottom end is if they're growing extremely fast, and the top end is if they're growing really slow. Now, the way that makes sense is that it's how much they're going to reinvest. If you reinvest a ton, you're lowering your net income margin. You're throwing less to the bottom line and you're reinvesting. And so you're trying to maximize top line growth. More users, more originations, all things like this. If we do get close to 80 cents, it's because, hey, the macro environment just wasn't there for that. We can't find a way to acquire new users at the rate that we want to. So we might as well save our money, bring it to the bottom line, and increase earnings per share. All right. But yeah, I have not found a single thing that has come out to take away my bullishness on SoFi. Yet the stock continues to fall. So what did I do last time in the last environment whenever we were in $10 going down to $6 or $5 or $4? I bought more. Okay. At 30, I was hesitant. Now in $25 ranges, I'm like, man, the market's appetite, like call options, the amount of money flowing into markets, rate cuts are affecting people's ability to get risk-free rates. So more money's going into markets. Robinhood is getting every bit of that benefit right now. The stock is skyrocketing. SoFi is growing too. Yet they're actually their long-term price, we're still up a ton. Okay. But long-term price for Robinhood, we're also, we're up like 6x now, or 6.5x, in the past 1 year on their chart. So I know they're not one-to-one. I know they have different growth rates, different margins, different customer base. I'm fully aware. But this market is bullish for SoFi too. If you don't think they're going to benefit from the ability to sign new loans, have a loan platform business, grow in many of these areas with rate cuts, I don't know. You're kidding yourself. So I'm honestly close. I'm not going to right now, but I'm close to potentially looking at taking some of my hood to double down on SoFi. Some. I'm never, ever going to sell out of Robinhood. But, if we actually look at this, I was actually playing around with this on Fiscal AI. So this is funnily enough, this is another great feature. Yeah, we'll look at it at this rate. This is Charles Schwab versus Robinhood. Okay. And let's put that up and this up. In blue, we have Charles Schwab and their assets under custody. Now, both of these have reported higher numbers since this has come out because they show off monthly statistics. Charles Schwab's at closer to 11.2, 11.3 trillion. Robinhood's closer to 315 billion. But it's clear to say which one is a larger platform. Let's not act like Schwab's not a growing business either. It's not like this is a dead in the water business. From 2022 up to Q2 of 2025, they've essentially nearly doubled their business. They are growing as well. Okay. But whenever we look at the market cap of these two businesses, Robinhood is just sprinting to close this gap. Now, I think they actually will. I actually think there's going to come a day soon where Robinhood is more expensive than Charles Schwab. But at that time, what are we doing? Like, I'm all for them taking the full market. Yes, they benefit from active traders, so those are higher margin, higher revenue products than just doing index funds and these sort of things, which can be beneficial to one company versus the other. So yes, the revenue looks closer than the assets under custody, but still, this is not super close. They're off by $30 billion. They're off. The thing that separates Charles Schwab and Charles Schwab and Robinhood is SoFi. That's the difference. There's a $30 billion company that can fit between these two businesses. But if I could, if I was a business owner, okay, we're talking about buying like old school Warren Buffett, you could acquire a full business. Would you want to buy SoFi and Robinhood completely, or would you want to buy Charles Schwab? The entire business for the same price? And that's what you have to ask yourself. And I don't know. Guys. The net income difference, which by the way, like the growth here is still it's higher for Robinhood. Fully aware. But it's not like Charles Schwab's not growing. I mean, last quarter they grew 24%. At that size, 24%. It is worth thinking about. That's all I'm suggesting. I'm not anti-hood at all, but companies that just go up get me worried. Hood's now at 148.67. We hit 150 today. We hit 150.21. This is unprecedented. We've never seen anything like this. And if you've been able to acquire shares anywhere down here, you don't have anything to worry about. I'm doing phenomenally on Hood, by the way. Someone said, sorry, the water idea, whoever said that, someone ban that guy. Billy, you're a mod, ban yourself. You made me, you're making me get a cough now. Jimmy says, why only $94 then? It's just more shares for the same amount of market share. So that doesn't matter. The price of the stock does not matter at all. What matters is market cap. Okay. Or even better, like something like enterprise value. I do make mistakes. All good. I already forgive you. I sold off half my Hood today, paid off my car loan, felt so satisfying. Isn't that the best? Like, investing changes people's lives. Imagine just going to work every single day. You're putting all of your money into your savings account and you're losing to inflation. Like, can you imagine this? People did this like all through COVID and everything. It was just like, if you didn't have assets, you're just losing. So Amit, you have poisoned my chat, brother. This is every comment is just CRN. CRN. There's like 100 of them. No, way more, actually. I apologize. So are we buying Reddit? I think Reddit sub $200, or even here, if you want to, like, I don't even think that's too much to ask for a difference in price, is super interesting. I love how good they're getting at monetizing their customers. And as you guys know, I am so bullish on advertising in any environment. AI does not negatively affect advertising. It betters it, right? And in a world of so much AI content, I think these places where humans can go to talk and hopefully that it's another human on the other end is extremely useful. So I don't think, oh, he is calling. What's up, brother?
So you had a stream scheduled for 8 p.m.
Okay.
And then it magically went to 8:30 p.m. I left my stream at 8 p.m. and told everybody to go to you at 8 p.m. and raid with the CRNs. But then everyone was waiting for 30 minutes because you needed to go take a dump or whatever you needed to do. And you ruined the raid for 30 minutes.
Okay, so you know what's funny is I probably had it scheduled for 8 o'clock for, I mean, minutes, dude. Like it was not long until I realized that I had to change it. So you had looked in a very small period of time where
I guess so.
But yeah, okay. That makes sense because the amount of CRNs that I've seen is I started getting people DMing me it. Like just
Yeah, people are great.
Yeah, so I knew something was going on. I don't know.
Yeah, no, the goal was to leave my stream and go into yours, and then everyone was so excited, and then it just goes to 8:30, and I'm like, sorry guys, I guess I looked right at those 2 minutes when it was at 8 p.m. Instead.
I love you though, brother. I appreciate the raid. That's super nice. But
it would have been nice if you were actually live. That's all.
Yeah, I'll do better. I'll do better. What are your thoughts on Reddit?
I have to re-listen to a lot of the stuff you said. I am annoyed with it because I bought it at 115 and I sold it at 120, and I just thought the multiple was too high back then, and it was so stupid because they were growing so fast, and kind of had to look beyond that. I'm just worried that like the AI engines are not maybe as friendly to Reddit as SEO has been. I think they'll figure it out, but like at the end of the day, it's advertising, right? They have to get traffic onto the platform, so unless they license up the data and sell it, which they have a $60 million deal with Google, which to me is nothing. Like 60 million is peanuts. So I'm like, at the end of the day, they have to get advertising traffic.
Those are all their deals are all for like 60 mil, but they're all coming up for renewal.
Okay, so yeah. I think their data is worth billions. Like literally, it should be worth. I mean, Reddit is the front page of the internet. I don't use it that much, but every user-generated question that you could think of, like across which college campus is good, or hey, I just went through a breakup, I need some advice. Like all this stuff is on Reddit, and the LLMs are good, but Reddit just that human touch is really good. So yeah, I don't know where they exist in a world of advertising or in a world of data as a service. Maybe is their
yeah. So that's definitely one that people are looking at because it's like the future and it's getting people excited. But or it's almost like looking at SoFi and like if that's your argument, then like you're only bullish on the tech platform, then you're missing what's actually happening. Like the real money is still being made just purely on platform. Which maybe that's not the story stock that people want, but there's a lot of money to be made. So if I'll say, and for people that are listening right now, the TLDR is that internationally, they're really, really pushing. I mean, this has been a US company. They do not want it to be exclusively US from now on. So a lot of new like multi-language supports, advertising out into other countries. International has finally overtaken how many people are in the US. They think that's going to continue to expand. Average revenue per user.
But you'd be buying it for ads, right? That's why you'd be excited to buy it at the end of the day.
100%. 100%. And there's been a real change in monetization for ads. Now they have things like Reddit shopping, like dynamic product placements. So you can actually like see the ad and look at a product and hit buy now, like those types of products. That's doing very well for them. It's the advertising, average revenue per user, new users coming on platform. That's the story to me. The data is the cherry on top, but they're making their own LLMs. Reddit Answers has 70 million users already. Like Reddit search is growing.
Wait, so what if they just made their own competitive LLM?
That's what they want. They essentially end game, they're going to be a browser. Reddit's got all the information. They've got all the users. Why would you need to go anywhere else on the internet?
And they'll just have ads inside of their browser.
Oh, yeah. Basically. Yeah. But there was a report that came out today essentially saying, like, based on the information that we're doing on Reddit or on Meta, they think that word for word, we believe that there is ample room to drive revenue outperformance as Reddit's ad tools mature. They also think that the amount of users coming on platform is going to grow. Like, I don't know. And those two S curves stacked on top of each other make for a really good business. New users and higher average revenue per user is a slamming combo,
Oh, I agree. And they're profitable. I mean, I know the multiples up there, but it's not like it doesn't seem like they're slowing down the growth. And AI should be an accelerant for them. Like I sold this thing way too early, and now I'm just like, I don't know when the right price. But it was at like 280. Now it's at like 215, right? So
you got some anchoring bias with this stock. I was talking about that earlier.
100%.
Yeah.
But I think like it is one of the few ad plays that's growing quick. You have Google and Meta that are doing good, but they're so big. Then you have AppLovin that's growing like crazy. And then Reddit. I mean, like, what other names are really growing in ad tech? I mean, it's not Trade Desk, right? It's not some of these smaller ad tech names.
Yeah, I mean, even like, even compared to any of those names, Reddit puts them all to shame. On total revenue, they grew 77%, but on advertising revenue, they grew 86%. Like, that's a disgusting number year over year. This is the first time that isn't a fourth quarter where they've had the highest amount of average revenue per user. Like, the speed at which they're ramping up their advertising revenue is crazy. They only just recently started putting out products to like handle super large advertisers. Like, they've never really had tools for them.
So are you buying it yet or no?
I haven't purchased it, but like,
You're thinking.
I'm definitely thinking. I am also, bro, I don't know. We got to talk. I might rotate some money from Hood into SoFi.
What? No.
Bro, the run up is just crazy right now.
Yeah, so you sit back and just enjoy it, bro. You don't freaking. I mean, look, I don't think it's crazy to do what you're saying. I'm being hyperbolic, but I do think, dude, if Hood's on her Palantir journey, then she's going higher. That multiple is going to expand.
Yeah, I hope so. But I'm just looking at the I don't know. How much of
is it getting expensive? Yes, but look, if you said that with Palantir, because this price Palantir is probably like 70 or maybe even less than that. This is probably like Palantir at 50 or Palantir at 65, 70. And then Palantir did another double after that. I'm not saying Hood's going to do that. I'm just saying, like, if it's a generational company, is this hype that's leading it? I don't think we think it's hype. I think we think it's just more people are getting excited about the story and the growth and verticals and expansion, all that stuff. It's not just pure BS hype. It's definitely not. So if that's not the case, then why? You would have to assume the risk reward on SoFi or whatever other stock is way better than Hood right now. Which, like, on paper, maybe. But the company itself is just, it's unicorn, right?
Well, I agree with you. It's in, well, I mean, unicorn status, not to its original degree, but I mean, it's already broken out. Like, there was a day where Robinhood and SoFi traded in similar fields. Now, Robinhood is $100 billion more than SoFi stock. Like, I asked a question. I asked a question to the.
Go ahead.
I asked a question to the chat today. You tell me if you would take this. Okay, you're an investor. You're buying a full business. Charles Schwab is the exact same price, exact same. What would you take? Would you rather buy, if you had $168 billion, Hood and SoFi, or would you buy Charles Schwab?
I buy Hood and SoFi any day of the week.
There's $11.2 trillion of assets under custody. They grew that revenue by 24%. It's not like they're dying. They grew by 24% last quarter.
Who, Schwab?
Yeah.
Oh, they grew revenue 24%?
Yes.
Oh, that's fine. I'll still take Hood, though.
like how much of Hood's growth right now is them expanding their user base
No, but bro,
versus just a bull market?
you're thinking of it too deeply. Just look at the future. Hood is the future. Robinhood is the future. Schwab is not the future.
I
It's just
agree.
that simple.
In the year
I'd buy Robinhood. Just it's the future.
in the year 2000, you know, Amazon was the future. A lot of people knew that, but it didn't get back to that price for 9 years. You know, I think
Dude, look, if Hood takes a mean dip, the funny thing about this is Vlad has done such an exceptional job proving that this is a generational company, just like Palantir, that people will be ready to buy that dip. If this thing gets back to 120, which would be like if it happens, whatever, people will buy. If it gets down anywhere below 100, people are going to buy. So the idea of us that got in early, and so much of our audience that got in early, I mean, like, there would have to be such a good risk reward to mess up that compounding. I mean, you know, you're going to own this for the next decade, Tanner.
no,
Like,
I'm never gonna sell out of this name, but I want to take advantage of. I just feel like Hood is getting every benefit of the doubt, and SoFi is the complete opposite right now. And I think they're going to have such an unbelievable Q3.
I think SoFi is going to do great. I just don't know if you want to trim Hood to buy more SoFi. I feel like
there's other names that I could trim.
There's plenty of other shit in your portfolio you can find.
Yeah.
To get rid of other than Hood. But the only reason I'm adamant about this is because I went through this with Palantir, and you know, at 70, 80, at 90, dude, I was thinking of taking profits. I was like, dude, this is getting kind of, but like then you realize, wait a second, is it actually hype and nonsense creating this run? Or is there something very, very, very sophisticated that you have to look beyond just the short-term momentum? And like with Palantir, I really think there is something special. And with Hood, I think it's proving that there is something special. There's something very real. Now, in a bear market, anything can happen. But if there was anyone on the planet who would know how special Hood is, I think it's you and me, given how intimately we've covered it. So then the question becomes, do we mess up the compounding to get into another name that A, has the burden of outperformance, and then B, is just not as good of a like fundamental company from a technology perspective? I think we can all admit that, right? Like, you know, SoFi has to do acquisitions to increase their technology. Robinhood does it all in-house because, you know, of their, or if they do R&D, they do it way, or acquisitions, M&A, they do it way better than SoFi. And like, we just know this. These are objective facts. Doesn't mean SoFi's bad. It just means Hood is on a different level there. So do you really mess up that compounding? That's I guess the question everyone has to ask.
Yeah, no, I think that's super fair. I'm just I don't know. And this is the thing, right? From Palantir going from 9 to, I don't even know what we're at right now, 180 plus. I would never have been able to even hold on that long because it's just, I can't even justify it anymore. You know, Hood is still in that range where I'm like, okay, like I can see this, but as they surpass the total size of Charles Schwab, and I'm talking about in the quarters today, like I mean, earning the same amount that they're earning and everything. I know one day they absolutely will, but it gets harder and harder at 200, at 250 to justify these types of prices.
But we're not even there yet. I mean, if we get to 200, that's a whole different conversation, right? But like,
I know, but as it goes up and SoFi goes down, that's the multiplier on my conviction, because SoFi's lowering. And I'm like, what is going on? Like, they're either both going to do very well or not. I don't know.
Yeah, I think that give me 1 second.
Who knows, guys? Who knows? I'm not trimming anything. And I think some people get upset even whenever I just am thinking through my thoughts. But it's been a very quick rise to these prices. That's all.
Dude, I was gonna say, I think the mental model here is you sit back, you let Hood do its thing, and you find some other junk in your portfolio to trim to buy SoFi. Like, yeah. I mean, there's got to be, and when I mean junk, I just mean like something that you maybe haven't touched.
No, bro, I've got junk. I can trim stuff.
Okay, so then why are you even pontificating getting rid of some of your Hood?
Because I don't think some of the companies that I hold have ran, and I still have obvious belief in those names, or else I wouldn't hold them. You know, like, but Hood has just ran so much.
Here's the question. Would you trim hood for SoFi over Nvidia for SoFi? Because when you talk about multiple, I'm like, Nvidia, okay, maybe 10 trillion, cool. That's like a what 2.5x from here. Hood, if we're talking about a trillion, that's still a 10x from here.
I know, but I didn't create this $1 trillion number that people keep saying. You know, that's what makes me into that's what makes me into timeline Tanner. I'm sorry, I don't think $1 trillion is coming anytime soon.
Oh, but let's say it's coming in 10 years, and let's say Nvidia in 7 years can do 10 trillion. It still would be a better return for Hood, even with the extra 3 years. So why wouldn't you sell Nvidia for SoFi? Like just mathematically, right?
Yeah, I think that the product differentiation between Hood and its competitors and Nvidia and its competitors, like Nvidia has a much less time.
No, none of that matters. It's just math. If you think Hood can get to $1 trillion eventually, and Nvidia can get to 10 trillion eventually, Hood is a 10x weighting for you. Nvidia is a 2.5x weighting. SoFi, I would imagine you think is at least like a 5x from here. So why not get rid of the one that can only go up 2.5x to buy the thing that can go up 5x versus trimming the thing that can go up 10x, even if it's not on, a 5-year timeline, a 10-year timeline, to then buy SoFi.
I see what you're saying. I just don't know if I look at stocks like that. Like, I get you. I get you. But I also want to price in some level of risk and like, hey, what if, Robinhood gets disrupted? Like, what are the chances of that? And
well, that's just not. I mean, look. Okay, maybe, but who the fuck is disrupting Robinhood? Who is that? What company on the planet is even close to thinking of fucking with Robinhood?
You know what name it is? A name like Coinbase. That would be the closest. It would be.
Look, Coinbase is going to do great, but it's not.
It's going to be a crypto name.
Yeah, sure, but like crypto is fine. Like Robinhood is much more than crypto, so I don't see that happening necessarily. Coinbase is great. I think they're going to do fine. I don't think that's eating away at Hood. Also, Coin and Hood are so small in the broader Binance, Kraken type of ecosystem, so those guys are going to be gunning for the other guys' lunch.
But bro, yeah, that's some of the problems that I'm just like, Robinhood is so small. They have so much market cap to take. I love all of that. But I'm like, we're pricing in so much forward growth and it just keeps widening every day.
Dude, well, this is what happened with Palantir. Dude, I got a lot of shit on my channel for bringing up the same argument, which is, guys, you know me, I'm the Palantir guy, but goodness gracious, this is a $250 billion market. Now we're at 400. But I was like, I couldn't make sense of it. And at some point, I was humbled as well, saying, dude, this is not how the market is thinking of this company. Yes, they're pricing in more growth. Yes, they're expanding the multiple. Yes, they're thinking a decade out. Yes, they're using very fancy DCFs to make sense of these prices. But at the end of the day, the market's right, always. So it's like, look, if the market has said Palantir deserves a $400 billion market cap for the past 5 months, maybe the market will be wrong. Eventually, Palantir will go through ups and downs. It was down 10% today. But at the end of it, it's not going back to 50 billion market cap. And most people would think a 50 billion market cap on 4 billion of revenue is generous for Palantir. And we're at 420 billion, right? So it's like, for Robinhood, what? You think the market is going to be okay given Robinhood a $90 billion market cap, given all the innovation, all the growth, all the excitement, all the compounding, all these freaking Hood events where Vlad gets everyone excited? You think the market's going to be okay with just giving them a $70 to $80 billion market cap because that's more reasonable compared to Schwab? No fucking way. And if that's the case, then the market is going to price it the way the market wants to price it. And as a result, I don't think you fight that. I think you say, all right, you don't have to buy more, but you definitely don't have to trim in the process of it.
No, you're right. I could probably find other names, but boy, oh boy, am I getting excited for SoFi here. And like at every turn, all you can see is just more and more negative news. And I'm just not seeing it. Like Anthony Noto is retweeting criticism about his company. I mean, have you ever seen a CEO do that and then drop terrible earnings? Like I've never, you know what I mean?
So SoFi's going to crush it. I don't know why they're down. I think this is stupid as well. I think they're going to crush, but I am confused why they're down. Like, I don't get it. It's not the fact that BITG came out and said we messed up is not only embarrassing for them, but I still don't get how that didn't immediately shoot SoFi back up into the 28s, 29s. So I feel like there's something else going on.
Well, there was a Fitch rating thing. I've got a video coming out tomorrow. Appreciate you, Amit. That was a good segue. but on just all the attacks that SoFi's been under, and all of them have been proven wrong. Like, it's insane. And every last one of them has dropped the stock by 2% a day, 3% a day. It's just like, what is going on?
So,
Like,
dude, you think of hedge funds pushing this or something? Or like,
I don't know. Like, Giuliano Bologna, the sell side analyst that is like super negative on the company. He hasn't covered this company in 8 months. Now the stock's starting to fall. Now he puts out his report again. I'm just like, what is going? I don't know. I don't think it's too like. I don't believe in too much manipulation. Maybe it's that. It's starting to feel like it more than ever, but maybe I'm just I'd like to think a little bit more optimistic than that, but I'm not sure. But bro, I actually have to let you go because I got to start wrapping this stream.
Yeah, I'll get out of here. But next time, don't delay the stream by 30 minutes, bro. You fucking ruined our shit.
Honestly, man, I really appreciate that raid, and even though I ruined your timing there, I've been streaming like every day. You got me pretty motivated these days. 100,000 subscribers from the big Amit. It's insane.
Wait, are you doing another stream right now?
Yeah, right after.
Okay, cool. All right, I'll be there.
Cool.
Awesome. Yeah. All right, thank you, man. Talk later.
Yeah, see ya. Bye. Ladies and gentlemen, like he said, we are going from this stream over to another stream, which the great and powerful Stephen Fiorillo will be on. We're going to talk some more stocks in that next stream. This stream won't immediately continue. This one will end. There will be a 15-minute buffer, and then the other one's going to start at 10 p.m. Eastern Standard Time. But yeah, the milkman's going to be there. Exactly. The milkman's going to be there. Then he's doing, I think, his first live stream tomorrow. And then he's got a bunch of interviews the next week. I know that he has reached out to some people to do some interviews. So I cannot wait to see what his YouTube channel, or how that gets started. It's going to be weird seeing Steve run his own videos. Okay. Would you take a home equity loan to buy SoFi? No, I'm just out of principle. I don't want to lend out to buy SoFi. Whose channel is on next stream? My channel. Steven needs to give a bad rating. Yeah, that is so funny, Vincent. That is good. Steve gave a negative rating to Robinhood, and I think it's climbed. It's probably up like 20% since he wrote that. It actually is up 20% since that. He said that at 122 or 121. We're now at 148.67 in like 3 days. Okay. Ladies and gentlemen, thank you all so much for watching. I really do appreciate your time. I'm sorry about the pushing of the stream. That was my bad. But we got to take a look first at Reddit on Fiscal AI, which was a great help. So thank you all so much for watching. Really do appreciate your time. But see you on the next stream, 10 p.m. Eastern Standard Time.